Imagine this. You log into your trading account. The charts are alive, green candles flashing, indicators lining up. Your heart beats faster, and in your head you whisper, "This is it. This is the trade I've been waiting for." But let me ask you, if trading was really that simple, why do more than 90% of retail traders lose money? Even with powerful strategies, advanced tools, endless education, most accounts still end up at zero. In this video, we expose how to use psychology to protect your money from burning away. Picture yourself pressing buy. Everything looks perfect. The market moves in your favor. Your account turns green. You lean back and say with a smile, "I knew it. I'm a natural." But here's the question. Is that confidence or overconfidence? The same feeling that makes you think you're unstoppable is often the exact trap that destroys traders. Psychologists call it the overconfidence bias. It convinces you that skill, not luck, is driving your wins. But the truth? Sometimes just one red candle is enough to erase everything. Now the tables turn. The candles go red. Your heartbeat races. You stare at the screen and whisper, "It'll come back." Just one more candle. Sound familiar? That's not strategy. That's loss aversion. Behavioral finance shows losing $1 hurts about twice as much as gaining $1 feels good. That's why traders cling to losing positions just to avoid the pain of being wrong, even while their account bleeds out. And here's the scary part. Your mind doesn't just trick you once. It tricks you again and again, repeating the same patterns. Remember moving your stop loss just a little lower, telling yourself, "It's fine, it'll bounce." That wasn't logic. That was your brain refusing to accept reality. Or maybe you double down on a losing trade, saying, "I can't end today in red." That wasn't discipline. That was revenge trading. And revenge trades don't just drain your account. They drain your confidence, your patience, your future. And the sneakiest trap, the illusion of control. You tell yourself, "The longer I stare at these charts, the better I'll trade." But research shows the opposite. The longer you stare, the more fatigue sets in. And a tired trader makes emotional decisions. Decisions that cost real money. Let me hit you with this. A brokerage study found the average trader holds a winning trade for less than 2 minutes, but holds a losing trade for more than 20 minutes. Why? Because winning feels safe, but losing feels unbearable. So they lock in small wins fast and let big losses run until it's too late. The irony, if they just did the opposite, cut losers short and let winners run, their entire results would flip. Think about this. How many times have you said, "Just one more trade, just one more signal"? Hours pass, your eyes burn, your coffee's cold, but your brain screams for action. This is called impatience bias. You believe more trades mean more profit. But in reality, overtrading is one of the fastest ways to blow an account. Or the hot hand fallacy. You win 3 trades in a row. Suddenly you feel untouchable. You increase size, you take bigger risks, and then one loss wipes the entire streak. These aren't random mistakes. They're psychological traps hardwired into the human brain. So, how do professionals survive when 90% don't? First, the pause. When your heart races and emotions rise, step back. Close your laptop for 5 minutes. If you can't walk away, you're not trading. You're addicted. Second, the trading journal. Not just numbers. Write your thoughts, your fears, your impulses. Because your biggest enemy isn't the market, it's the voice in your head. And when you put that voice on paper, you can finally control it. Third, visualization. Before you click buy, imagine the worst case scenario. If you can't accept that loss calmly, then you're not ready for the trade. These aren't theories, they're survival tools. Every consistently profitable trader uses them, whether they admit it or not. Here's the truth. Strategies change. Markets evolve. Indicators come and go. But human psychology, it doesn't change. The same fears and impulses that destroyed traders 100 years ago are destroying traders today. And the brutal fact is this: if you don't master your mind, the market will master it for you, and it will charge you tuition in the form of endless losses. So let me ask you, what's the biggest mental trap you've faced in trading? Fear, greed, impatience? Drop it in the comments. You're not the only one. If this opened your eyes, subscribe right now. Because every week we break down the hidden psychological traps that silently wipe out traders and show you how to escape them before it's too late.